think we have a very narrow window, maybe 2 weeks, maybe less. What happens in the next few days or couple of weeks is vital. All of these trends are very bullish for Bitcoin particularly, but the crypto world overall over time. A distributed network that's not owned by anybody but owned by everybody is almost priceless in a situation like this. Now, I must admit, I didn't think that we'd get this far this fast in terms of Russia's actions within Ukraine. So I've been slightly back-footed, but I've already been expecting a global slowdown in the economy. And so I've been starting to position that way. But let me talk about what I'm seeing now, how I'm thinking through this current event, and then some of the ramifications. So let's dig in quickly to where we are now. There are, as ever, in geopolitical disputes, two sides of a story. And when you're trying to analyze geopolitics, you need to be aware of both. So then you can understand what is propaganda, who you're being told by what person for whatever reason. And in this situation, we know Russia's been very clear on its intentions to buffer its borders. Peter Zeihan's piece the other day made it very clear. I think D. Smith's gone through this, and most of the geopolitical strategists we've had on Real Vision have also looked at this. So Russia's been very keen on stopping NATO encroaching on its borders. NATO, on the other hand, is very keen on not letting Russia encroach on its borders, but it's been moving NATO's way. And this whole game has been played out for some period of time. I've written this up in GMI and written it up in Macro Insiders, or Real Vision Pro Macro, is this whole situation that we saw started with Chechnya, then moved to Crimea. This Ukraine story was the Crimea story. Then it's these splintering states. Then it's Ukraine itself. It's been a story that the Russians have had an obsession with in how they want to deal with it for their own sovereign protection. And I don't want to go into the geopolitics of who said what to whom and why. That's not relevant right now. What's relevant is trying to figure out where we are. So I think we have a very narrow window, maybe 2 weeks, maybe less, which is that the Russians have surrounded Kiev pretty much. Now, we understand that the supply chains are not good, but we also understand the Russians have done this a lot of times before with bad supply chains. It's pretty common, and sheer brute force is how they do it. So they're surrounding Kiev now, and what happens in the next few days or couple of weeks is vital. You can see the Israelis have been negotiating on both sides. Maybe there's a negotiation to be had here, and the negotiation will be something like, and again, we don't know because this is geopolitics, and there's a lot of different national pride and a lot of consideration, global consideration, all in this. But let's assume that they can agree a ceasefire, agree some sort of splitting up of Ukraine. So they allow the splinter states. Then maybe they say, well, the government can move and have its own Ukraine, but over towards the west side. And the Russians put a new government in eastern Ukraine. They have West Ukraine, East Ukraine. Something of that sort kind of solves a lot of the problems, although obviously it's still not a good situation. And we'll come on to the big picture still later. But that could see a de-escalation. If we can find some variation around that, where the Ukrainians themselves get some sovereignty, they may lose some sovereignty, or they keep sovereignty of the whole country, but a puppet government gets put in, and the splinter states go to Russia, in which case they're kind of surrounding Ukraine anyway with Crimea as well. That, to me, is something where sanctions get not dropped, but eased off over a period of time, because everybody feels like that they've negotiated a settlement, and therefore Russia can be rewarded with something. That's the best possible case scenario that I see right now. It's not my highest probability case either. If Russia remains out of the global system, which looks increasingly likely, then we probably have a big liquidity problem. And that spits around the world in various ways, whether it's countries who are trying to get access to dollars, banks trying to get access to dollars, or whether it's credit spreads widening as people pull back, trying to assess the risks that are going on. And we don't really know. I mean, how does this affect Egypt? How does this affect the Middle East at large? How does it affect all sorts of countries? Again, we don't really know yet. But that's a hugely concerning moment, and that's a big global recession if that takes place, and a massive monumental geopolitical shift as the world really is forced to separate out. China starts separating out. And again, we'll come to a bit more of that in a sec. The other issue in the geopolitics is everybody has now learned that the dollar is a liability and not an asset. So i.e. dollars can get taken away from you at will. So even though it looked like a very smart move to weaponize reserves and the financial system, what is actually happening is you are now forcing the de-dollarization of the world. Now, my view on that is that's a slower process. Obviously, Russia just got thrown out, but they've been planning for it. Let's be absolutely clear. Russia's been planning for it. They probably didn't imagine it this fast, this apocalyptical, but the Chinese will be planning it too. The central bank digital currency is part of that planning. So everybody wants to move away from the dollar. And right now, the instant thing that any central bank can do is own more gold. So I think this is a very bullish gold environment for central banks because that's what they do. It's an asset that they're comfortable with. I also find very concerning of the geopolitical level that we have frozen the assets of people that have not been tried in any sort of court. Now, it depends whether there's a confiscation going on here or freezing of assets. It depends on EU law and who's taking what. But it tells people that property ownership is not something that they perceive. If you own a property that's not in your jurisdiction, you don't own it. So I think that is, again, a shift that's going to take people's mindsets. Obviously, all of these trends are very bullish for Bitcoin particularly, but the crypto world overall over time. Now, crypto trades both as a risk asset and a store of value. The store of value element is becoming predominant right now and very clear. The risk aspect, well, it's a bloody risky world out there, so let's wait and see. Long term, I think it plays into what crypto is and means in this world. A distributed network that's not owned by anybody but owned by everybody is almost priceless in a situation like this. If they finish the invasion and then we get some clarity. Clarity is what markets want. Is it going to go into World War III or not is what we're trying to grapple with right now. If not, that's okay. Markets could rally. Then they have to deal with the recession coming. The markets sell off again for that, quite possibly. So I think it's best not to try and be too clever, too cute, pick the exact scenario, but go at the toppest level macro to say, okay, what are the things here that can help protect me? And those will be gold, bonds, dollars. And I like crypto, but I would prefer it if we had the central bank printing. It feels for crypto very much like the setup in 2020 in March, when we sold off really hard, failed to make a new low versus the low a year and a bit ago prior, and then took off. We haven't made a new low. We've thrown a war at crypto. We've thrown Chinese bans. We've thrown all sorts of stuff. 8% inflation, central bank with an expected 8 rate rises, which is never going to happen. And crypto didn't make a new low. So I think there's a signal there, but again, we need to watch it. I don't think that's the bet to put all your money in right now. All of my money's in it, but I am adding to these other trades. The crypto situation gets interesting, I think, as people start to realize that at sovereign level, this becomes a solution for them too. And the rise of central bank digital currencies, they're moving away from the SWIFT system. That's all coming into this game. But the world is a net debtor in dollar terms. And the more of these debts you start writing off by forcing people out or seeing defaults, the higher the dollar goes. And the dollar is a big risk here. So if you get a liquidity squeeze, the dollar goes up. The dollar's the one thing that I'm looking at, but we also know that the Fed try and stop that because they know the dollar is the wrecking ball. They can't let the dollar go up too fast. So they start supplying the world's banks with swap lines. So every time they've done that in the past, it's eased the issue. But here you've taken out a very big economy. I mean, Russia's gigantic. Russia probably has more natural resources than the rest of the world added together. It's something of that magnitude. So the GDP may not be big, but its asset base is enormous. And without that in the world, we end up with a huge loss of trade. And we've also got these dollar liquidity issues, which I think will bite the Europeans, bite the US, and bite everybody else. So I think that's all setting up to be a bit of a mess. The Fed will come in and try and flood the market with swap lines. So the money printers start in different ways. And I know there's a lot of people who watch this go, well, that's not money printing. It's enough to start changing the denominator effect of certain assets. So be cautious of that one.